Hello everyone. Today is Friday, March 1st, and it's 4:52 p.m. Eastern Standard Time. It's about 50 minutes after the regular session closed, and you can see my time and sales on the right, and there's some settlement trades going off here at 28:06. Anyway, I wasn't going to make a video today because it wasn't a great day, but I noticed something in the charts that did do well today that I wanted to share, so I decided to make the video in spite of it not being one of the better days for the auto trader. So first up is the crude on a Superenco 8 tick, and this hit its goal of 1,020, I believe, with no slippage on two trades back to back, and this is using our line break algorithm, as you can see here. So really excellent placement here, and notice that the potential trade in the other direction was avoided because of the line break on this one. We can't go short or long unless we have a corresponding line break signal. So while I haven't talked about this a great deal, it's a very valid concept. Okay, so the reason I wanted to make the video today is because while the DAX was all losers, most of the DAX charts were stopped out. We didn't have a single winning DAX chart. However, the Superenco 14 tick only lost $25. I'm going to show that in a moment. But the charts that did win today are in the E-mini S&P on the Superenco 4 tick, Superenco 6 tick, and these are really consistent charts, and that's what I wanted to show today, that in spite of this not being a day where I have all the DAX charts firing, the E-mini S&P really did well, and the E-mini S&P is one of the best markets to trade, pretty much on par with the DAX. It's just different. So here is our Superenco 6 tick, and this has a goal of 950. It's a limit order with a 2-tick pullback. This one here hit its goal and just had 1 tick of slippage, and basically here's the trades. Only one loser here, no drawdown. Superenco 4 tick with the higher time frame of, looks like the 60-minute. No, it's a Superenco 6, and anyway, this has a goal of 850, and it hit its goal and had a tick of slippage. There was just a minor drawdown on a losing trade here of about 200 per contract, and then it came back with these two nice winners, three winners in a row here, and brought it up to its goal. So here is our DAX on the Superenco 14 tick, and this ended up negative 25 for the day, but it did run up to nearly 2,000 early on in the session. It did have a drawdown as well of almost 2,000, so this was really volatile today. So it went from minus 2,000 to plus 2,000, and then ended up at 25. Okay, next is the E-mini S&P on a Superenco 4 tick, and this is something new that I tried. Basically, the higher time frame is a Superenco 4 tick, but I have a higher sensitivity. So it's the same chart as a higher time frame, but the sensitivity is 2 on the higher time frame versus the lower time frame. The sensitivity is 0.618, which is a Fibonacci number. And the idea behind this is that we get in the trade based on the lower time frame within the shaded area here, and that worked out pretty good. As the first time showing this chart or trying it, I gave it a goal of 850, and this hit its goal, probably had some slippage with some pretty decent trading here. There was a minor drawdown of about 125 per contract that you can see down here, and it made an equity high of about 300, then drew down again only about 100, but then came back with these couple of winners here and hit its goal. Okay, the E-mini S&P on a regular 5 Renko chart with a higher time frame of Superenco 8 did 625 for the day. The goal is 800. It did 687.50 actually, so close to its goal. Very respectable performance on 2 winning trades in this short. Well, the higher time frame was short from here to here. It caught these 2 swings, and I must have pretty tight stops on this. Probably the stops could be loosened a little bit, but it still did pretty good. Okay, and then another E-mini S&P Super Renko 6-tick had a modest gain, a goal of 750. This one had a modest gain of 187.50. And that's all for today's video. Thanks for watching.